we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
You're watching Countdown right here on Bloomberg Quint. Today's session sees some more pressure building up, and in the last few minutes of trade, in fact, we've been seeing since mid-afternoon the pressure building up on the benchmark indices giving way, and now in the red by almost 0.5%. So those early morning gains of closer to 1/3% have been completely washed away. We'll talk about the internals in just a few moments, but to quickly run you through the headlines for the time being. Markets are trading off the day's high, but in a range. The Nifty trades below the 10,800 mark. Most sectoral indices are trading with gains. Oil marketing companies are the worst performers on the Nifty after crude oil prices posted their longest rally in 17 months. IndusInd Bank will be reporting its earnings any moment from now. A deteriorating asset quality may lead to elevated provisions in this quarter. And Nifty Metals Index is the worst performing among sectoral indices. All constituents are trading with losses. All right, that's the headlines for now. But as highlighted, Neeraj, it's a complete U-turn from the start of the trading session.
Yeah, a bit of nervous edges for sure, and maybe the broader end of the spectrum as well. It's not quite holding up. Now, remember the last few days we've shown some nervousness. Crude hasn't exactly been in our favor as well, so it's not that the macros are doing rather well for ourselves, but today, in the last few minutes, certainly a bit of pressure that we've had. The Brent crude at about 60. The European market should come up on your screen. Yesterday, there was some support in the European indices. In today's session too, while the European markets are doing rather okay for themselves, we've had some pain points. Bring up the heat map very quickly and let's see what's moved from where it was maybe a couple of hours ago, which is leading to this bit of pressure. Well, there is certainly pressure on Yes Bank as a stock, 3.5% down. All marketing companies correct quite strongly. So BP, HP, remember, BPCL was the Bloomberg Edge recommendation in trade yesterday, and that stock is down about 3% right now. HPCL to about 3%. GAIL has corrected about 4% in the session today. Bharti Infra, as much as the management spoke about how optimistic they are about the scenario ahead, maybe because of the 17% run-up that the stock has already seen, there's a bit of a correction that is coming out here. Mind you, the market is not falling off the cliff completely. It's just about 0.25% lower, but a lot of stocks are looking slightly wobbly. There are some heavyweights which are holding out in the session today, as a result of which we are doing okay. Reliance is just marginally in the red. HDFC Bank marginally in the green. ITC is arguably your top contributor, up about 1.5%. HDFC about 0.5% in the session today as well. Tata Motors not exactly a heavyweight. HUL about 0.5%, and which is why we've not kind of completely fallen off, and the heavyweights are just about steady. The ones that have fallen are not exactly the stocks which have a very heavy weightage on the index, and maybe which is why we're still reasonably okay. But Devina, this is nothing compared to the kind of falls that we've seen in select stocks at the broader end of the spectrum.
Yeah, Neeraj, and it's been a continuous grind lower for few names within the mid-cap space. Particularly, I'm talking about Group Finance, and if you take a look at the kind of moves the stock has had ever since its deal announcement with Bandhan Bank, it's been a free fall. Day on day, you've seen the stock giving up more than 5%. In fact, the first day of the announcement was down about 16%, then closer to 7%. Today, another 9% given up. So there's a continuous grind lower on the stock, and heavy volumes at that. The price to book multiple for Group Finance has also come off sharply from levels of about 15, 16. Taking a look at Dilip Buildcon, the possibility majority of them missing their guidance is something that the street is not liking. Stock's been beaten down. DB Realty, the stock that had gained some flavor some time back, there's some profit taking on the counter. Gainers, the media stocks and the print media stocks on the ad rate hikes announced by 25%, those stocks are cheering it. So HT Media 20% higher, DB Corp 8%, Jagran Prakashan though not all that much, but still gaining ground by about 2.5%. Banking stocks continue to run up. So a few from the mid-cap space just to highlight them. You've got an RBL Bank which is up 2%, IDBI Bank up 3%, and Central Bank of India which is up closer to 1%. Volume buzzers then. Praj Industries holds on into today's session, and it's been a consistent outperformer over the last 2-3 sessions, and the stock's traded about 58 lakh shares. On the flip side, amongst the losers, you have an Adani Enterprise which trades closer to 30 lakh shares and has given up about 3% in terms of its price action. Let's take a look now at what's happening in the futures and options space and liquid market, and what kind of indicators are we getting from there. Agam Vakil joins in for that. Agam.
Well, the complexion of the market certainly changed over the last 15-20 odd minutes, and what we're starting to see is some short building up. But where does it leave us when it comes to your benchmark indices? The Nifty is looking at a little bit of an increase in OI of around 1.2%. Let's also take a look at the Nifty banking futures and see where they're trading at, and there you have it. That's where we see unwinding coming through, even as we see a decline of around 0.8% coming through. And with that, when it comes to the India Volatility Index, that has also, seen a little bit of an up move back above the mark of 16. In terms of your open interest distribution, we are not seeing too much, considering at least as far as the change goes, because it's still within that range of 10,500 on the lower end and 10,000 and 11,000 on the higher end, but a little more writing coming through, specifically in the 11,000 and the 11,000 and the 10,900 calls. And going ahead, in terms of stocks, I'm keeping an eye on NIT Technologies, sees fresh longs, 12% added in OI. Moving on to the next one, we also have some longs building up in other counters, like, actually a handful of them, and we should have them on your screen as well. But there you have it. Okay, so Gale, of course, is one of them, which is actually seeing a short building up of as much as 4%. L&T Finance Holdings, another one, which is seeing shorts. And, these are just among the few stocks that are seeing traction. So mixed cues coming in for the futures and options space too.
All right, Agam, thanks very much for that. That's a quick snapshot of what's been happening in the futures and options segment. Let's bring in a management then, and the stock in focus is Dilip Buildcon. CRISIL has downgraded its long-term debt instrument to CRISIL A from CRISIL A+. Outlook, however, has been maintained at stable. Let's discuss the business and other prospects for the company going forward with Rohan Suryavanshi. He's the head of strategy and planning at Dilip Buildcon. Rohan, thanks very much for taking out the time. The report suggests that there are possibilities that you may miss the FY19 revenue guidance of about 10,000 crores. Could you highlight that for us, and what exactly is the company's strategy now in order to probably go ahead and meet this target and not miss it?
Hi, Devina. First of all, thank you for having me on your show. So, like you rightly pointed out, number one, that the outlook that CRISIL has said is stable. Number two, our short-term rating is exactly the same. There's been no change in that. The long-term, obviously, they have made a slight correction, but, we don't possibly agree with the same. But I understand why, they might have done that. Since you asked about the revenue, let me firstly say that the revenue guidance was basically a 30% growth from last year's top line, which is far ahead than the industry average. Now, this guidance was based on our assumptions of projects starting and we getting their appointed dates so that the revenue starts flowing from them as well. Now, what has happened is, and this is a systemic problem, it's an industry-wide problem, that there has been a certain delay in the appointed dates that for all the projects that the government had awarded. Now, given that there has been certain delay, we felt it was prudent to sort of inform our shareholders and investors that there might be a small miss on what we had guided. Now, while we had guided for 30%, it might not be so much, but it will still be much higher than the industry standard, and it will still be a number which will be close to what we had originally guided towards.
All right, so it may not be as drastic as half of that, but it will still be closer to 30%, is what you're saying?
It will be only a small single-digit sort of difference from what we had originally indicated. So in terms of percentage basis, nothing as drastic or nothing as big. It will be a very small percentage.
So when you're talking about the delay in appointment dates, how far has the pushback been?
It will be like a month or two kind of, pushback. At least we don't feel it will be longer than that. But, when you start at the end of the year, even those months, each month counts. So we don't foresee the delay to be longer than that. And that is very much in line with what is typical in the industry.
Can you talk a little bit more about the ongoing projects and what is the order backlog currently?
So we have a very robust order backlog. As per our last public disclosure, we got 24,000 crores of orders in hand, which is spread over 17 states. And we're very confident of, doing a good, like I said, revenue this year. So then the backlog mainly consists of road projects, which is about 90%, and 93%. The rest is in mining, in urban infra, in irrigation, in metro projects.
Any difficulty with regards to liquidity? Are you facing any challenges there?
Any difficulty in executing these projects, you're saying?
No, getting liquidity.
No, there is no liquidity challenge that we have. We are very comfortable. Now, let me also tell you, for the last 10 years, we have grown at a CAGR of 50% year on year. Now, whenever a company is growing at that pace, obviously you are running at the peak of all your resources, whether it is financial resources or your equipment or your manpower. You're always running at the peak and the maximum. But it's not really a challenge. Like, we've been doing that and we've been growing at that pace. Right now, we don't require any additional liquidity from any source. So liquidity situation is okay. It just might be a little higher than the industry standard, but that's also because our growth is much higher than the industry standard. So it is just in line with that. All right.
Rohan, just talk a little bit more about the current debt on the books and whether or not, a figure of about closer to 3,000 crores, which stood on the books in FY18, is something that you're looking to bring down.
Absolutely. I'm glad you asked this. Now, this because I want to also clear some of the, myths and the misinformation that has been spread around it. So our total debt is about, net debt is about 3,400 crores, out of which 60% is working capital and the rest is all equipment. Now, because we buy all our equipment, we invest so much in equipment, and that's a big portion of our debt profile as well. What is very important to note that in the last 5 years, our debt has moved from 2,200 crores to 3,400 crores. Why?
All right. Okay. I think we've lost that line with Rohan. We'll try and patch that back because he was trying to, explain the debt position of Dilip Buildcon. He said 60% of the debt of 3,400 odd crores goes towards working capital. The rest is machinery. Since they're so heavily invested in machinery, that's why the debt load seems to look slightly more pronounced for them. But I think he's back with us. Ron, I'm sorry we lost your line there. If you could reiterate your point.
Yeah, I'm so sorry that. So I was saying that from 2,600 crores of revenue to 8,600 crores of revenue as of now on a trailing 12-month basis, our debt has only increased from 2,200 to 3,400, which is basically means for 6,000 crores of additional revenue, we have only required 1,200 crores of debt, which I think would be the best that any company could have done. Also, what is very important, that our working capital cycle in the same time has reduced by half while we kept on growing at the 50% CAGR. So on a relative basis, there is no other construction company in the sector which has reduced its working capital cycle or showed such improvement there with that kind of growth in top line. So we'll be the best in that sense by far.
All right, got that. Ron, just one last question before we wrap up. While you already spoke about the FY19 revenue front and the guidance and the miss out there, anything on the profit that you can give us a ballpark to for the entire year?
The profitability should be in line with the 17-18% guidance that we have given. So we feel that it will be in that same line. So I don't see that there is a...
No change in that guidance?
No, there's no deviation that we see from that as of now.
All right. Rohan, we'll leave it at that. Thank you so very much for joining in. Appreciate you clarifying the same for us.
Thank you very much for having me on the show.
All right. That is the management at Dilip Buildcon talking about the downgrade that they have received from CRISIL and their debt position, clarifying some more with regards to appointment dates delay that he spoke about. The stock, though, has been beaten down by about 6% right now. Moving back to the markets then, and the Nifty actually has regained ground. So from being down closer to 0.5%, is just about managing to touch that crossover line, 10,798, coming back towards 10,800. Well, moving on then, volatile commodity prices, currency swings, a liquidity crunch triggered by IL&FS, and political and regulatory uncertainty. Corporate India has a barrage of headwinds to deal with this quarter. How will they shape up earnings for these companies? Darshan Mehta is standing by to give us an overview of what can be expected. Darshan.
See, Devina, what happened was second quarter was the weakest quarter that we saw in the past five quarters. So just a flashback at what happened in the second quarter. So the number of weak earnings were the highest, the number of strong earnings were the lowest, and most of the numbers were in line. But nevertheless, there were EPS cuts that came in. Now, if you look at what happened over the last two quarters, in the first quarter, we saw an EPS a number that came in that was much lower. So this is the trend that we saw. If you can have the next slide, and that will pretty much show you what the EPS was. So in the first quarter 114, and that was on account of a big loss by SBI. Second quarter was 121. This time around the number expectation is much higher. When we started the quarter, and that is 1st of October, that was the first day of the quarter, that time around the EPS estimate was well in excess of 135. So 135. As we moved out and the earnings season ended officially, was no, second quarter earnings season ended November 15, that was 137, and currently is at 138. So the expectation this time around are of a strong quarter. The other parameters is what has changed. Currency and crude are two important factors. If you're looking at it, currency has moved from levels of 65 right up to 72. So even on a quarter-on-quarter basis for IT companies, there is a currency tailwind, and crude has moved from 61 right up to 68. So people who follow a quarter-on-quarter impact, yes, there will be a better quarter that will come in. For some of the oil companies, it won't be, and for companies which follow a year-on-year, obviously input cost will be much higher. Couple of interesting points what has changed from last quarter. Monthly auto sales have come down significantly. So auto is one sector that you need to watch out for. The other factor that has happened is the fact that the festive season has been weak. So that has changed from last quarter. And the third thing that has changed was this entire issue of NBFCs and housing finance companies and the cash crunch that has happened, which will be reflected now in this quarter. So these are the three sectors basically you need to focus on in trade once the earnings season officially starts.
All right. Darshan, if you have to break it down sectorally, and if you have to see which sectors are better placed to report better numbers this time around, which would they be?
Okay, so I'll break it up into sectors. First of all, the agri sector is something that you need to watch out for. The sowing season has been good. Climatic conditions haven't been good. So that probably won't play out for some of the domestic companies. But for export players, it will be good. For UPL, the only Nifty company, LATAM is something that probably will save them because their traction has been good. The other one is auto, and it's all for everyone to see. Monthly sales numbers have been disastrous. There are deep discounts that are there. Commodity prices are higher. So auto Inc, it will be a poor quarter. Only thing in the auto space that could do well is the lead prices which have come off, which will aid the battery makers, and rubber prices have corrected, which will aid the tire makers. So these are the two sectors that you need to watch out in the auto space. Aviation, yes, it will be a good quarter. Jet probably will report a profit. SpiceJet and Indigo will report a profit. Jet and SpiceJet, the losses will reduce. Everything going in favor for them. The next sector that we want to talk about, and that is the banking sector. There has been a pickup in loan growth, moderation in the NPA formulation, credit cost. So everything is working for them. Even the treasury income will aid PSU banks. But what we are seeing is that real estate slowdown may hurt housing finance companies. So NBFC as a space probably may underperform this time around. The next sector that we want want to talk about, and that is the capital goods space. Order inflow hasn't been strong, but they have a decent order book. So execution is something where focus will happen. Margin improvement will continue, but interest costs will dent. That's a concern on the working capital. So that's something that needs to be addressed. Cement will be a bad quarter. Pricing power is absolutely missing. Nothing is favorable, so it will be a weak quarter for cement. The other sector that we want to talk about, and that is basically the consumer durables. Moderation in FMCG growth. The festive season hasn't been that great. Sustained rural demand is there, but two categories, paints and cigarette, probably will do much better than the traditional consumption theme. IT, it's a seasonally weak quarter this time around, but cross-currency tailwinds, if you look at the average, that has moved from 70 to 72. So tailwind is there. Organic growth is strong. There will be some sort of supply side pressure on the margins, but don't expect any changes to guidance this time around. The other sector is oil and gas. Sharp fall in crude prices over last quarter, lower gross refining margins, and inventory losses for OMC. So won't be the best of quarter. Even Reliance probably won't be that good. Metals, everything's gone wrong for them. The base is high. China is not working them. Correction in base metal prices. In fact, all of them are trading at a fresh 52-week low. So don't expect much from metals, which exactly is the reverse of what happened in the third quarter. The other few last sectors we want to talk about, pharmaceutical, again, it will be a washout quarter. Some bit of tailwind in terms of currency, but nothing's working for them. Most of them have written it off, and even same case with telecom. Nothing's much happened. ARPU pressure is there. Exits will hurt the tower companies, so that again will be a weak quarter for them.
All right, Darshan, thanks very much for that. So that's in-depth analysis of what could be expected from quarter three this time around, which sectors are expected to do well, where are the pain points looking a little bit more exaggerated. I think we should have the numbers of IndusInd Bank coming up shortly. Remember, there they are actually. Net profits at 985 crores. The estimate was about 810 odd crores. So that's definitely seen an uptick, a positive number there. The important number is obviously going to be on the asset quality side. Remember, last quarter they had taken that additional provisioning of 275 crores with regards to the Island FS account, whether or not there is any additional increment in provisions, or whether there is a transfer of some of those provisions into the NPA account. That seems to be watched. Net interest income this time around was expected to come in at 2,360 crores. I don't think we have that number yet. We just have the profit number right now, which is higher than street expectations. Agam, any other numbers that you're
Yeah, so sure. So the first point that we were keeping an eye on in IndusInd is the provisioning. Provisioning stands at around 606 crores as against 590 crores. The spike in provisioning is not that high on a quarter-on-quarter basis, and that is perhaps why we're seeing that net profit come in slightly higher than what we were expecting. Actually, it's not slightly higher, it's well over 100 crores higher as far as your expectations are concerned. The other aspect that I want to address is your gross NPA ratios, which currently stand at around 1.13 percentage points against 1.09. This is again sequentially quarter on quarter, which means that again there isn't a significant uptick when it comes to your gross NPA ratios. Coming down to your net NPA ratios, again that stands at around 0.59%, again 0.48, and again this is where there isn't a significant increase. So well, as far as asset quality is concerned, yes, sure, there is certainly some amount of deterioration, but it is not as bad as what the street was expecting. We are, of course, as Devin has mentioned, we are awaiting the net interest income number, and that, of course, will also determine whether or not these numbers look good. But for now, as far as profitability is concerned, slightly above expectations. We did see a little bit of a spike there, but on the whole, it seems that the markets are largely factoring in what we've seen so far. So let's bring in an analyst view here. We have Pratesh of Prabhudas Lilladher joining us. Pratesh, good afternoon. Your initial take on the numbers, what have you made of them?
So I think it is in line with our estimates. We were expecting about 996 crores type of a profit, and the provisions are slightly above our estimates. So that means your top line or operating profit should have been better. So we were expecting about 2,083 crores, and I think it is 2,100 crore plus. So I think your operating performance is strong. They haven't recognized the ILFS account into NPS, and the provision should be almost like similar of accelerated nature, which we had seen last quarter. So I think
that's the big question here about ILFS. How do you think that's going to come into accounts eventually? Because that's clearly not here, it's showing up here. So how do you think that should be accommodated for?
So basically, see, how I understood it is that the RBI isn't allowed dispensation on the same, but the classification will only happen after it is a NPA, after 90 days, right? So I am guessing that till December 31st, it was not 90 days, and that's why it should come in Q4.
All right, Pritesh, I also heard you say that the net interest income may be slightly lower, if I'm not mistaken, as far as this quarter is concerned. Can you tell us about the possible reasons why that could be, and what does that mean for the outlook going forward as well?
So I think, see, there should be, once the NPAs, so ILFS NPA is taken into consideration in Q4, there will be some interest reversal on the same, right? So there should be some pressure on NII that way. And generally also you have some pressures on your NII from the margin side. I don't know what is the margin currently, but seems to be this quarter the beat has been a little bit higher from the other income from what we had estimated. So the operating profit also is a beat from the other income.
Yeah. And in fact, I was going to ask you about that because I think closer to about 120 odd crores increase has come from the other income side.
So I think that's the beat where we have seen. So basically, I think the treasury yields and the maybe the fees should have helped them this time. So the yields eased off by about 60-70 basis points in one quarter. And maybe they would have got some gain from there.
Okay. What happens to the stock now? As in, what should one do with the IndusInd in comparison to some of the other larger names?
So I think there is still an overhang, right? So provisions will continue. I think they are continuing with that contingent provision of about 250 plus crores every quarter. So
all right. I'm sorry, Pritesh, I have to cut you there. We've got Mr. Romesh Sopti. He started the press conference.
And a growth of 27% in operating profit. And I think the big takeaway for us in the management is that the quarter-on-quarter growth, which is more indicative of the future to come, has been very, very strong in almost all the headlines, whether it's revenue or fee or cost management or operating profit, etc. So very strong quarter-on-quarter growth, good growth in our liability franchise. So CASA remains at, CASA is now at 44%. And in fact, in this quarter, we had a very good growth on current accounts as well, which showing a growth almost 30%. The headline numbers on the balance sheet also look very strong. We had a credit growth of 35% and also had a deposit growth of 20%. No, it's not. Is the mic? Okay. Can you hear me now? Yes, sir. All right. So strong growth in our deposit line, 20%, and very strong growth on our lending line as well. So in the lending part, if you want to know the breakup of the growth, then the corporate bank grew by 34%. Vehicle finance continued to show very, very strong traction. And vehicle finance loan book has grown by 30%. And the non-vehicle retail book has also grown by almost 28%. So what we call a pretty secular growth in our lending book, which has been sort of spread out across several sectors, and there is no concentration. And as a consequence of that, some of the leading sort of concentrations that we had below 5% have reduced further. So whether it is NBFCs, HFCs, real estate, and MFI, all those sectors that people talk about, has actually, we've seen a reduction in the percentage contribution to our overall loan book. I talked about costs. The costs have been maintained well. Our cost to income ratio came down at 43.65%, so it's stable overall. And the fee income, of course, showed a very strong growth. Core fee income grew 18%, but total fee grew by almost 24%. And I think one of the vectors that fueled the growth is also, of course, treasury gains. There was volatility both on the rupee and the money markets. And if you rode the volatility well, then you made money, and our treasury did a great job in doing that. We are tracking well on our overall planning cycle 4. You know, we have these planning cycles that we design every 3 years. And we are on track almost on all the vectors. We have a slide that we can show in terms of PC4. Okay, it's okay. It's all right. Other than that, I think in terms of qualitatives also, credit costs. Credit costs without including ILFS, which is the disclosure we've already made, which is still a standard account in our books. Credit cost came at 18 basis points. And therefore, our overall credit cost for the 9-month period is at around 40 basis points. And it's well within our annual stated sort of target of keeping our credit costs at below 60 basis points. So when we talk about business as usual, then our credit costs are well under control overall. I think the burning question is about the ILFS group, on which we made a full disclosure subsequent to last quarter's results, and where we have shown a provision already of 375 crores. That provision has been buttressed by a sort of a floating provision that we have, 350 crores. We had made 350 crores, and we had a 70 crore floating provision as well. We've added to that provision to take up the total attributable provision of ILFS to 600 crores. The status of that particular exposure is that the resolution plan in its final form is still to come, but we have good reason to believe that there is enough and more security, and we will assess in fourth quarter also whether we need to make any more provision, and we are more than happy to have, we already conveyed to the market that we will continue making provisions to reach a level that we feel should be a comfortable level in terms of covering our exposure as well, in terms of the haircuts. There are, to our knowledge, there are attributable assets in the holding company. We know it has realizable value, and we will take that realizable value into account in coming to the final provision figure for this particular group. So, in spite of absorbing this additional provision that we made, this provision also, like last quarter, is called a contingent provisioning. The account is standard, right? It's not an NPA in our books, but yet we continue making provisions on the account, and total provisions, as I said, is 600 crores. And we have no hesitation to say that we will make more if our assessment of the realizable value of assets in the holding company deserves any more sort of a provisioning. Now, in spite of taking that particular additional provision, we've shown a quarter-on-quarter growth in our net profit of 7%. So I think that trending is an encouraging trend for us. The year-on-year growth stands depressed at 5%, but if you go up 2 lines above that, you see the operating profit growth at 27%, which means sound underlying businesses. Every part of the bank is delivering, and delivering more than expectations. We can talk a little bit more about what's happening in vehicle finance or non-vehicle finance or in the corporate bank, etc. Other than that, we continue to open branches. 92 branches and banking outlets have been opened. You know now that there are revised guidelines of RBI that some of the BC branches, for instance, can be designated as banking outlets, so they can do all the branch banking work. And therefore, the need for opening specific bank branches in rural areas, right, in unbanked areas especially, it can be replaced by these banking outlets through our BCs, etc. So 65 of those were actually also open. So we are well on track. We are spending the money on opening new branches and also on technology. And the client acquisition is also happening. Last quarter, we went from 2 million customers to, from 12 million customers to 13 million customers. This quarter, we moved from 13 million customers to 14 million customers. So we've got a run rate of 1 million new customers every quarter now. That's a quick summary. Yes, there are other vectors. I think net interest margin remains almost same as last quarter. And you see quarter on quarter, there's an improvement in ROA. Quarter on quarter, there's an improvement in ROE as well. Earnings per share, etc. I think that's sort of extra information that's already contained in the press release. So we can move on to a Q&A.
Going forward, how long do you expect this account to remain standard? And do you have floating provisions in place from which you'll be making these additional provisions? And to what extent would you making additional provisions by the close of this year?
Yes. So whether the account is standard or non-standard in our book doesn't matter. We are going to make provisions well in excess of what they call the IRAC norms. IRAC is the income recognition and asset classification norms, which is prescribed by RBI. So we are going to make provisions well in excess of IRAC. So whether it's standard or non-standard doesn't matter, because the provisions we have made is already as per a non-standard account. Already. In this quarter, we will make more and go well ahead to this thing. Now, how we will arrive at the figure on how much more provision to make, I have said that this is a assessment done on the basis of the realizable value of the assets which are held in the holding company. We have a good sensing of that. We are fine-tuning that particular sensing on and that will determine how much more provision. It's not the fact that it will become non-standard. We are far ahead. We are going to be far ahead of non-standard provisioning in any case. So we'll make more. We have already made that provision. Whether it's standard or non-standard doesn't make a difference. But in quarter 4, we will make more provisions so that we move into a zone of comfort as far as the realizable value of the assets is concerned.
So it's not even an SMA account with any of the lenders so far. We do understand because a lot of the bankers that approach
definitely is SMA. Definitely is SMA. SMA which 0, SMA 1, SMA 2.
Yes.
I don't know. Different banks will have.
But for your bank, sir?
Yes, certainly it is not SMA 0.
Is it SMA 2 for you, sir?
It is SMA 1, SMA 2, some are SMA 1, some are SMA 2.
Okay, so could you break up your exposure and the provisions you've made in this 3,000 crores to the group and the subsidiaries, and which one do you expect?
No, I think we have said in the past that we expect no loss on the SPVs. We have very good reason to believe that the valuation there is far ahead of the exposures that we have. So in the holdco is where we are making the provision, and that's where we know that there are realizable assets in this thing. We have a list of all those assets. We know the valuation as it stands in the books, but we will now do a realistic. We are doing in the process of doing a realistic evaluation of actual realizable value, and that will determine our final provision figure. So standard, non-standard doesn't matter.
So what were the slippages in this quarter for IndusInd Bank, and where were they from?
Quarter 3 last year, 0.5%. Quarter 3 this year, 0.46% net slippages.
So what is the status of the divergence report, RBI's divergence?
The report is out and we have no divergence to report.
Is it below 15% or is there no divergence?
We have no divergence to report. I mean, that's it.
To report?
No reportable divergence.
No
reportable divergences. Thank you.
$2,000 crore. And also, could you give us an outlook on net interest margins?
Sorry?
On the net interest margin.
Net interest margin. So, if you saw previous 2 quarters, NIM had slipped. So we came off the peak of 3.98 to some 3.84. I think the yields on loans are now catching up. So the lag between repricing of the funding book and repricing of the asset book is now catching up. And therefore there's stability now in the NIM. And going forward, we expect it to be stable at least in Q4 as well. And I think Q1 onwards is when we expect to start moving up back to where we were slowly on the NIM. So stable with an upward stance. Upward means improving stand.
What would be your guidance on credit costs?
See, our guidance on credit cost is what we do for ex-ILFS. Right? ILFS is a one-off. Ex-ILFS is what our business as usual. When we start 1st April of next year, we'll start without the ILFS because we would have provided. So ex-ILFS, our guidance, not guidance, our ambition has always been in the last 3 years that we should be below 60 basis points. We are at 40 basis points in 9 months. We expect that we will come in within 60 basis points.
So you said that the MSME book has shrunk. Could you point out if there are loans where you would be awaiting RBI's dispensation for restructuring loans that are under 25 crore?
MSME book has shrunk. We didn't say that.
So what is the MSME book like at this point?
All right, that's the management at IndusInd Bank highlighting the numbers for us. Ex-ILFS, he maintained that they expect to grow business as they have already spoken about in the past. Slippages, fresh slippages this time around, last time around was closer to 0.5%, this time around 0.46%. PAT growth, as you can see, thereabouts at 985 odd crores, estimates were 810. So, but that additional income that came in from the other income component of about 120 odd crores could be the reason why you're seeing that uptick in the profit numbers as well. All right, let's go back to the markets. Then the stock though is not doing a whole lot much. IndusInd Bank is down about 0.75%. Ruchit Jain of Angel Broking is joining us right now on the show. Along with him, we've got Chokkalingam of Equinomics Research. He's joining us on the show right now. I'm just going to come to you first, Chokka, on your initial take on the IndusInd numbers.
Yeah, quite impressive. Though net profit is up single digit, the profit before provision is up, over 25%. Even the loan book across various segments, they have reported 25 to 30% jump. And plus, both the net NPA and gross NPA are at control. And therefore, it's quite impressive. But however, the stock is already pricing in most of the positive features of the bank because it on the latest adjusted book value, it trades at a little more than 4 times. I think that it's a fair value. In case its stock falls quite significantly, then one may consider accumulating it.
Okay. Let's take a look at how trade shapes up on the index and whether or not any short-term positions can be taken. Ruchit, you want to come in on your index strategy?
Yeah, hi, very good afternoon. Well, if we see the recent historical data of Nifty, then since last 1 month, the prices have traded in a range, and this range-bound trading action has led to formation of a symmetrical triangle pattern. Now, unless we get a breakout on the either end of this range of this pattern or this symmetrical triangle pattern, we are not expecting any directional move. Now, 10,730 is the lower end of this triangle pattern, and 10,880 is the higher end of this pattern. So we are expecting this range to be broken in next 1 or 2 trading sessions. So as far as fresh trade is concerned, we are advising our clients to take a trade only when a breakout is seen either on the downside or on the upside. So 10,880 would be the breakout level. In case if index goes above 1080, then one can initiate fresh long positions for target somewhere around 11,000 to 11,750. And 10,730 would be the support level. So in case if we see the support getting breached, then we will have to take a call to go short on the markets. So as of now, we are waiting for the breakout beyond the range of 10,730 to 10,880 to take a directional move on the index.
Right, Ruchit, what stocks are you placing your bets on today towards the long or the short side?
So since we are trading in this triangle pattern, there are opportunities seen on both the sides of the trade. Even in today's session, we saw that the volatility now has started increasing. So I have selected 3 stocks. Now there are 2 buy calls and 1 sell call. The buys are based on the price and the volume action, and the sell call is based on the reversal pattern which has been formed. Buy recommendations are, one of them is ICICI Prudential. Today we have seen that the stock has given a breakout from its consolidation phase with very good volumes. So 320 now becomes a strong support base. Traders can go long at current levels with stop below 320 for target of 351. RBL Bank within the private sector banks has consolidated in the range since last couple of weeks, and if today we see, then the up move has been supported by good volumes. So this is a preemption that this higher end would be crossed. Hence I am taking a limited risk and recommending call to buy a call option. 590 call option could be bought at current levels with stop loss below 3.75, expecting target around 21. And I have a sell recommendation in TVS Motors. Now, the auto sector as a whole has been underperforming the broader markets, and TVS Motor has formed an inverse flag pattern, which is a bearish pattern in technical analysis. So I'm expecting a correction in TVS Motors. One can go short with stop loss above 546.5 for target of 520.
All right, well, fair enough. Moving on to other stocks that we want to address on a fundamental basis. Mr. Chokkalingam, we are heading into earnings, and of course, we're going to have the two heavyweights announce their earnings over the course of the next couple of days, ITC and TCS. How would you play the IT sector in general? Let me ask you, what do you make of your expectations with respect to earnings, your preference on TCS or Infosys, or would you prefer to play the sector in another way?
Yeah, as far as the results are concerned, IT and private banks like IndusInd Bank, most of the companies would come out with decent results. They would be the outperformer if you compare with other sectors. And Infi, TCS, I'm expecting around 12-13% minimum profit growth year on year, because rupee started appreciating only at the back end of Q3, and they would remain as a defensive. Particularly because of the general election. I am suggesting that those who are holding large IT stocks, they can continue to hold. But wealth can be made in, once again, mid-sized IT companies, because many of them have corrected a lot. And also, I am expecting further consolidation, which we saw last 3 years, to get repeated in the next 3 years. So therefore, I would suggest something like Emphasis, which has corrected a lot. Now it is at a decent valuation. Also, Datamatics, which is still available at a single-digit PE, and they are proposing to demerge and list Lumina Datamatics. I believe that restructuring would create wealth, and then followed by Persistent and Cyient. So these are the 4 stocks one can consider in the IT pack.
All right. Chokka, your take on the deal between Bandhan and GRU, and what's happening with GRU right now? The stock has been battered out of shape, come off levels of 320, now closer to about 250 odd, 30% already shaved off. I mean, what's the likelihood of the stock moving down further? And if at all, there is a possibility to see some sort of a valuation play or an arbitrage play in the short term while the deal culminates between a GRU and a Bandhan?
I will not buy either of these 2 stocks. In fact, I've been giving sell call on these 2 for more than 10 months to 12 months, because the valuation comfort is not there. Before the deal announced, you had a GRU Finance on a trailing basis trading at more than 12-13 times price to book value. It's an enormous valuation. I was surprised because housing finance sector itself is losing its charm and growth is getting corrected. Same way with the Bandhan Bank, it went up to as high as 8 times to book value, much costlier than HDFC Bank. So one good thing to happen is that the 2 costliest players from the bank and housing finance, they got married. So now they are sinking together, and I would believe that GRU Finance can fall even another 20%, because no way there is a justification of 8 to 10 times price to book value in the changed economic environment. So I would say that one should continue to sell both GRU Finance and Bandhan Bank.
Okay, well, I'm going to take a chart check actually right now, considering we have seen some considerable movements, and I want to pull up something like, okay, let's pull up any of the OMCs. Let's pull up perhaps BPCL and HPCL, because that's where we were seeing significant losses. And HPCL is now trading near day's lows. That's down 3.3%. BPCL as well is seeing a lot of weakness today. Ruchit, how are you reading cues when it comes to some of these OMCs right now? And What would you do with them? Would you initiate fresh short positions right now?
So I think we have already seen a good recovery in the month of November and December in all the three OMCs. Now last 3-4 weeks we have been witnessing a consolidation phase, and there is a high probability this consolidation is likely to continue. Now both the stocks HPCL and BPCL have been trading below their respective 200-day moving averages since last few months, and even post this recent pullback move, their 200-day moving averages resistance have not been taken out. So I think fresh long positions should be avoided at current levels, and in case if anyone is holding existing longs, then they should look to book profits or come out of these stocks at current levels from a trading perspective. Only when the recent highs get crossed again, we would see some renewed buying interest coming in. So one can again look to re-enter in these stocks only when this recent highs or we see a breakout above the recent highs.
Okay, got that. Mr. Chokkalingam, now that we are going to be starting Q3 earnings season, where exactly are you expecting much of the pain to come in from? While we've already seen a precursor to the auto space in terms of the volume numbers coming softer, you are going to be seeing some amount of inventory losses coming for the oil marketing companies, as well as the fluctuation of the currency and its implications for the farmer and the IT pack. So how have you characterized the Q3 earnings?
Yeah, as you rightly said, on the positive side, FMCG, IT, private banks, they should do well. On the negative side, I feel the pain can continue to come from construction and real estate, and also a couple of PSU banks, and even the telecom, because year-on-year basis the revenue has come down. Maybe sequentially it is improved, but on year-on-year basis even the telecom should do quite badly, and followed by automobile, because the report of a lot of discounts and growth also has come down to poor single digit in many segments. So these are the sectors which should have pain. But of course, 2/3 of the sectors, which account for Nifty, should have a pain or stagnation. So only the select sector which I highlighted, they should be able to do well. So that's why we are focusing more on small and mid-cap segments rather than the broad companies which are identified with the broad sectors which are having problems now.
All right, Mr. Chokkalingam, there is also this question about auto ancillary, specifically considering we are already talking about the auto sector. There has been a little bit of an up move in something like a Motherson Sumi. On the other hand, we have the likes of Bharat Forge, GNX Axles, which are likely to see more weakness coming through on the back of weakening cues from the US, particularly the Class 8 truck orders. How would you go about the auto ancillary space right now? How are you reading the cues here?
Yeah, definitely. So, as you rightly said, you have two set of auto component companies. One set focusing on American, European markets. Other set which is focusing on the domestic market. So, as you highlighted, certain uncertainty coming from the foreign markets. I am also a bit worried. So, therefore, I am focusing on stocks like Jai Bharat Maruti, which is a play on Maruti. Of course, even Jai Bharat will have a problem of high growth. They won't be able to show, but the stock is down almost to 55 to 60%. The second set of stock is tire stocks. If you take stocks like MRF, 3/4 of the sales are from the replacement. So even if OEM sales are down, the replacement market would remain quite robust. So this is the way we are playing within auto component. That is based on more on domestic sales, and within that more on the replacement market, rather than chasing stocks like Motherson Sumi or Bharat Forge.
All right, Chokka, we'll leave it at that. Thanks very much for joining in. Appreciate you taking out the time. Let's get in another management and one important piece of news, a positive piece of news for print media companies. They are on a roll today, and the stock we are focusing on is DB Corp. The counter has gained the most in over 3 months intraday. This comes after the Information and Broadcast Ministry has hiked advertisement rates for print media by 25% for a period of 3 years. Let's talk a little bit more about how this will impact business dynamics in broader detail with the non-executive director, Mr. Girish Agarwal, who is now on the phone line with us. Mr. Agarwal, thanks very much for taking out the time. Your initial reaction to this particular news, and how positive is it for you?
This is a very welcome move, and on behalf of the industry, we thank government for taking this initiative, which was pretty well awaited. As you know, last 3, 4, 5 quarters have been really bad because of newsprint prices going up as high as 40%. So this hike of 25% on the advertising on the government business is certainly going to give some relief to all of us. Generally speaking, the government advertising is around 15% for most of the newspaper organizations. So on this 15%, this 25% growth will look like around 4% growth in the top line. And that top line will add on to the bottom line because there is no cost attached to it.
Right. Mr. Agarwal, if I can get you in on, the fact that this is going to be an election year, historically, what sort of trends have you seen? Does that mean a meaningful increase in revenues for print media companies? Perhaps if you could talk specifically about DB Corp as well.
So there are two kinds of advertising growth which comes around election time. One is the direct spend by the government. And the second one is when the government does increase their spending, the market grows and the sale of other consumer item goes up and those companies are advertising. So we are looking forward for those two kinds of benefit coming to the organization and to the larger industry.
Mr. Agarwal, just to clarify, the increase of 25% in terms of ad rates is on the existing rate structure?
Yes, very much.
All right. Now, just clarifying, because the last time the increase happened in 2013, it happened on the structure of 2010. How does this work out in terms of, the overall growth in advertisements coming your way? Do you see a hindrance because of this, because of the increment in the expenses?
No, I think this is positive. Government advertising rate going up is benefit for us. And the newsprint prices also are softening down. So there's another benefit going to come in the year 1920, the full aspect, because it has just started. So most of us already have the stock bought in for a quarter. So the real benefit of the newsprint prices going down will happen next year. And we are hopeful now that private companies, those who advertise with all of us, they may also consider looking some kind of rate growth. So that will give us some relief furthermore.
So you're not expecting any advertising spending cuts from corporates?
No, actually, we are now thinking they are already at the bottom, so they need to go up now.
Okay.
All right, Mr. Agarwal, if you could also give us a little bit of an idea on how you're seeing trends with respect to subscription revenues. What are you picking up right now? How can we expect the next couple of quarters perhaps to pan out?
So in circulation revenue, we are not taking any price increase over there. So whatever growth will happen is based on our copies growth. So in last 1 year, whatever copies we have grown by around 10-12%. So that impact will come in the subscription revenue.
Just one last question, sir, before we let you go. By the end of the year, could you give us an overall, a sort of a guidance or a ballpark figure as to what you intend to do on the top line and bottom line, your growth numbers?
So as a company, we don't give a forward-looking statements, but looking at the scenario around, we are very positive and hopeful for the future.
Okay, we'll leave it at that, Mr. Agarwal. Thanks very much for joining in. Appreciate you taking out the time.
Thank you very much. I appreciate it.
So a definite positive coming in for the industry, something which the sector had long been asking for. A 25% hike in ad rates, print ad rates over the current structure. All the stocks up 8 in the green, so 8% for DB Corp. Jagan Prakashan was higher in the morning session, but now has petered off a bit, but still 2.5% higher, and 20% for an HT Media. That's what the space is looking like. We are going to take a short break right here for the markets. We're back into the green, about 1/3% on the benchmark indices. Bank Nifty once again pulling the heavyweight there, so 0.5% on Bank Nifty. While we take that short break, you can hear out some comments from Pratik Agarwal of ASK Investment Managers. We spoke to him in the morning, and he is positive on the consumption space.
If you build the outlook for commodities, one should expect this to be a softer commodity year versus last year, and which by extension then means that in the Indian marketplace, businesses which are users of commodity and have pricing power, so branded businesses, cars, etc., would have some amount of margin uptake, possible margin uptake. And then, if we try and build a theme as to where we are or we would want to be focused, then, the space where we have a margin uptake, if we can complement it with strong growth in volumes, I think that is the space that would stand out. It would be a narrow space. Most of the names would lie in the consumption basket, given that capex would not happen, simply because any company that corporate banks would be happy to lend are not actually doing a capex, they're simply acquiring somebody else. And government is focusing on loan waivers, etc. So focus on capex will actually reduce, which then leaves you with a consumption play and financiers of consumption as being the main drivers. That is the space, frankly, where we are focused and we believe would sustain in a dicey marketplace that we foresee over the next year.
What started out as a quest for good coffee has turned into a single estate specialty roast coffee connoisseur's paradise.
It was purely, this is something that we want. We're looking for good quality coffee.
Theirs is a story of starting something amazing and new and refreshing.
It wasn't just Nat and me who were taking this journey to change the coffee landscape in India, but it was actually going to start from the farms.
The face of coffee in India has seen a sea change in the last few years. And it's owed now in a small way to Matt and Namrata, the founders of Blue Tokai Coffee Roasters. Watch their exceptional story only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. 27 minutes left to go for market closing, and it's an interesting day of trade. A lot of volatility in terms of the kind of moves we've been seeing from the start of the trading session, where we opened positive, then we've given up those gains and now once again rescaled a level of 10,800 after breaching it just half an hour ago. So that talks about the volatility on the index at this point. Not at the highest point of the day though, but still comfortable above 10,800. For the Sensex, that's to regain its lost ground, and the heavy lifting has been done by the banks yet again. So if we have the bank Nifty up almost 0.6% higher, and a breakup of all the individual names within the bank Nifty will tell you the kind of moves you're seeing. So the top gainer on the Nifty is actually Axis Bank, are doing well. HDFC Limited is up 1.7%. Then you have an IndusInd Bank. IndusInd Bank too, post results, the initial knee-jerk reaction was down. The stock moved down, traded down for almost 1%, and then from there now has come back up to 1% odd in terms of the gains. 1593 on IndusInd Bank. Then you've got a few other names to keep an eye out on. Kotak Mahindra Bank, HDFC Bank, ICICI Bank, all of them are trading in the green, which is lending some support to the bank Nifty as well. Moving on then, let's find out what has made it to Yash Upadhyay's list of the Fab 4 stocks this afternoon before we go on to chart of the day. Yash, what's made it to your list today?
Afternoon, Devina. I'll start with Terra Software. And in fact, two of the stocks in our Fab 4 list are locked in an upper circuit. First being Terra Software. It's a small cap company, but the big news behind this up move is that the company has received a big 325 crore rupees order from the Andhra Pradesh government. So watch out for that. HD Media is up in an upper circuit of 20% as well after the Information and Broadcasting Ministry hiked advertisement rates by up to 25% for print media. Kredan Infra is up 4% today after the company's Singapore arm received a big order of 168 crore rupees. So a lot of big order wins for these companies. And lastly, I also want to highlight Praj Industries. So this one's up 11.5% now on the back of heavy volumes, almost more than 6 times the 20-day average. So watch out for that. Back to you.
Okay, thanks a lot for that, Yash. That's our Fab 4 stocks of the day. Moving along then, and 2018 was a tough year for Indian auto industry, and that did reflect on the stocks as well. So much so that the Nifty Auto Index is cheaper than the Nifty in terms of valuations. First since inception, in fact. Sharad Dubey is joining us with more details. Sharad.
Good afternoon, Devina. The price to earnings ratio of the Nifty Auto Index has fallen below the price to earnings ratio of the Nifty Index for the first time since its inception and is trading at around 18 odd levels as compared to Nifty's 18.22. With rising interest rates, weak festive demand and record discount on passenger vehicles, the Nifty Auto Index has fallen by 19% since September and currently stands at around 8,900 points. Stocks like Eicher Motors, Tata Motors and Maruti Suzuki have corrected between 20% to 35% over the last 3 months. Analysts believe that weaker sales data in November and December and increasing raw material costs have given a gloomy outlook for the automobile sector for 2019. This is your chart of the day. Back to you.
Well, thanks for that, Sharad. We'll be watching out for that. Some very interesting cues coming in from there, from that chart of the day. But moving on, let's get in a technical voice here. We have Rahul Mohindar of Viratech Software joining us at this point in time. Rahul, good afternoon. Thank you so much for joining us. I'm taking a look at the charts, and at least as far as the Nifty is concerned, some consolidation is certainly coming through. The real question is, can we see a breakout upwards, or do we see a very sharp movement downwards? That's the question that's pondering on everyone's minds. How are you reading these cues?
I think there's no taking away from the fact that the market is within a range, and we are in a very volatile phase of the market. Clearly, the market is going to attempt a breakout. The numbers are fairly clear to most of us, but just to clarify this technically, I'm waiting for 10,920 to be crossed convincingly on the upside. And the support for the Nifty spot is around 10,630. So we clearly are, right in that range. We need to be patiently waiting for a further up breakout. In terms of the trend, the trajectory presently continues to be on the positive side. But yet I must say that this is a very important resistance we are at. Even for the Bank Nifty, the levels we are at right now at 27,700 is a fairly meaningful resistance. So I think, the trend stays positive, but I think what traders are a bit, kind of waiting back for are for these levels to break out. And above this, there will be further clarity within that trend.
Right, Rahul, the last time I remember speaking with you, and was a bit away, you were still bullish in ITC back then, and you're still bullish now. And you also have a sell call on Tata Steel. If you can take us through some of your calls here.
Absolutely. I think over the last 3 to 4 weeks, ITC has been on my buy list. And again, there are very clear reasons for this. The stocks typically consolidated around the 265 to 275 levels historically. So very strong historical support. Very big volumes that have got clocked around this 275 odd level when we look at, price at volume. And finally, we're looking at an upward move. If you're looking at near-term objectives, then 295 a reasonable target, a very strong resistance indeed in the short term. But again, those who are looking at this market from a 6-month plus horizon, I clearly think we're within a strong consolidation phase. This is a stock which is probably poised for 330 to 340. But again, you've got to give it 6 to 8 months minimum if you're trying to look at those kind of targets. Tata Steel has been on my sell list, continues to be on my sell list. In fact, every little upward swing, I've been looking at opportunities to sell short here. So again, this one for short-term traders, 464 is my next target on the downside for Tata Steel spot. And we're looking at a stop loss on this at 483. If you look at this stock, it's been a big underperformer below all the key averages. And the very fact that it broke 492 on a closing basis yesterday, that itself is a big negative for the stock. So continues to look bad on the weekly time frames as well as the daily time frames. So should be on the sell side here.
All right. Siddharth Sedani of Anand Rathi is also joining us on the show. Siddharth, good afternoon to you. I want to come to you specifically with Yes Bank. I mean, the stock was up in the last few trading sessions. In the morning itself was up closer to 0.5%, and the stock now is down 2.8%, closer to the lowest point of the day. We are watching out closely for the recommendations with regards to the names for the managing director position at Yes Bank, the successor to Rana Kapoor. But what is it looking like in terms of whether or not this, from an investment point of view, still stands to be a good bet?
Good afternoon, Devina. With the aspect of Yes Bank, we had been always, since the controversy and the step down of Rana Kapoor by RBI, we have been negative on the stock and we are not recommending the stock. However, now of course, once the name is out of who would be the leader of the bank, I think I would still like to wait and watch. But overall perspective, I can just tell you one thing, that the downside is very much protected from here on. How much upside can be seen in Yes Bank is again a difficult question to answer, but still I believe the upside is also very limited because of two main reasons. One is of course the new leader coming in place and understanding the things, and second reason, of course, once the leader comes in the place of Rana Kapoor, I think he would be looking out, and there is a possibility of provisioning increasing, some of the bad assets coming out. So making everything together, I would still say wait and watch for Yes Bank. If someone wants to go for a fresh buying, there is not too much of upside is left in the stock because most of the things are priced in. I would like to wait and watch and not take any action. I will keep myself neutral for Yes Bank as of now.
Okay, so hold that thought. I also want to take a look at Eicher Motors, and the question actually I'm asking is whether or not this 2 straight days of gains is about a short covering, and is this just a pause before you see further weakness, or is this a possible change in the trend that we're seeing? Rahul, why don't I pose this question to you? How are you reading into these 2 straight days of gains for Eicher Motors, and what are the cues that you're getting in?
See, there's no doubt that auto is one of those weaker sectors. We're not out of the woods. There's a possibility you'll see some of these stocks move up clearly because of the previous low supports. But I have a target of 18,000 on Eicher Motors, which means I still see a cut of about 2,200 odd from the current level. So a good 10% is what I see a slice out. Strong resistance at 21,150. It's going to be tough for the stock to claw back above those levels. So we'll continue to be on my sell list. I think, again, I would not read into this very excessively. And, talking about your point, yes, it could be some bit of short covering, but I don't think this is really maturing into some severe buying. The volumes have been very, very high ever since the new year. So from the 2nd of January, you've seen colossal above average volumes, and that's been accompanied with a drop in prices. So all in all, it points technically towards a bear grip control on the stock. So I would maintain a short position here.
And of course, there's the other 20,000 rupees stock, or 23,285 rupees to be precise. Page Industries, that's the other one, which is also looking at the 2nd straight days of gains after looking at significant weakness. So Ruchit, let me take this one up with you. What's your reading on Page Industries, and what would you do with this one?
So the prices have already seen no sharp correction since the month of September, and now if I look at the daily or the weekly momentum readings, then the momentum readings have been showing a pullback move from their oversold zone. So usually such scenarios lead to a pullback move, although it would be too early to say whether the stock has bottomed and would again resume its broader degree uptrend which we have seen since last few years. But certainly a pullback move could be seen in the stock in near term, which should take the stock back towards 25,500 to 26,000 kind of range.
Okay, those are two stocks there, Page Industries and Eicher Motors. Siddharth, I'll come to you with ITC. Would you be a buyer in the stock right now ahead of its numbers? Also, the calamity cess limited to Kerala, 1% calamity cess that has been announced is limited to Kerala now and not pan-India. Would that be a slight bit of a silver lining now, or rather that the overhang is out of the way?
I believe to an extent overhang is out of the way. Although technically stock looks little more comfortable with a short-term perspective. Fundamentally, however, it is very difficult because we have budget in front of me and there are a lot of chances of sin tax coming in place, and that has been the case with every budget going through. However, I would fundamentally, if I talk about any of the FMCG plays in the same space, I would like to play out much safer plays like Hindustan Unilever, which is having a lot of potential. Volume growths have been good, overall perspective revenue growth has been coming good, and the most important thing which happened recently with Hindustan Unilever is acquisition of Horlicks. So there are three factors which is important for acquisition of Horlicks. For HUL, volumes will spurt in going forward, margins will improve, and the company will have a lot of footprint and strength in the northern and western part of the country where Horlicks have really a good strength. So distribution network also will be far better than what it is in the northern and the western part of the country. So HUL in the FMCG space is which we are banking on with a target of 20 to 50, and we believe that it's been a leader of the space, and the kind of per capita consumption of FMCG products we have in our country around 1,000 rupees, which is 4 times higher in China. So penetration level is also still left, and when we talk about higher penetration, leader of the space cannot be left out, and that's HUL.
Right, Siddharth, if you can come in on the consumption space, but specifically with the underclothes segment. What we've been seeing over the past few days or past few weeks for that matter, that while valuations of Page Industries has come off, on the other hand, we're seeing gains in Rupa & Company, and Lux Industries is more or less exactly where it's been trading. So there's been a little bit of consolidation there. How are you reading cues in this particular sector?
Well, let's understand that leader will remain always a leader. Few percentage points of market share going to some second, third rank of players. That doesn't mean that the leader will go back into the history. So I would still believe that companies like Page Industries, although we don't have any recommendation on the same, but the kind of franchise they hold, and in terms of other aspects also, they've been doing good operationally, things are performing. I believe these kind of companies really a brand franchise, and this company may see two steps behind, but we cannot expect it to be completely behind the race. Of course, it will make up their market share soon, and it's a great stock, it's a portfolio stock to own, and I don't think there would be any concern. Maybe a quarter or two pitfalls can come, but I think it's a quality stock to be in.
Got that. Gentlemen, just stay on with us. It's time now to take a look at what the dealing rooms are recommending this afternoon. Yatin Mota and Darshan Mehta are here with their channel checks. Darshan, let's start off with you today.
Yeah, so a couple of stocks that's been spoken about. First of all, the first stock that's been spoken about, and that is Gujarat Fluoro. It's come off the day's high, but nevertheless, some of the HNIs are actively accumulating the counter. Even in the market turmoil, this counter has managed to stay up significantly in trade. So they expect more potential upside in Gujarat Fluoro. The second stock is basically a sector. Banks, if you're looking at it, the Nifty Bank has now moved to the highest point of the day. Across the board, there is buying today. Counters like Axis Bank, ICICI Bank, Bank. Axis has done extremely well for itself, but even HDFC Bank, ICICI Bank, and across the board there is buying that's happening. So banking as a space is something dealers are extremely bullish on. And the last one is trading at a 52-week low, BIKE Hospitality, but there's a buzz of a potential corporate announcement that could come in. That's something that I heard. So we'll keep an eye on for BIKE Hospitality. But Yatin, what are you hearing?
Well, ICICI Prudential, that is one stock in the insurance space wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. Of course, this is on the basis of future and option trends where they are looking at some good long build-ups which have happened in trade today. Apart from that, watch out for Delta Corp. Dealers do indicate that at lower levels, buying is recommended. They will be reporting numbers post-market hours today. And probably for the short to medium term, this is one stock wherein dealers expect some positive momentum. Stock is almost down and flat in trade right now on good volumes. And NMDC, that is one stock which is under pressure, 4% down, and dealers do expect the pain for these stocks to continue given the fact that steel and iron ore prices have been under pressure, and also domestic funds are sellers here. So watch out for NMDC. Dealers expect more downward pressure in the stock.
Right. Thanks very much, Yatin, for that. That's a quick dealing room check this afternoon. 10 minutes left to go for market closing. Let's quickly get you some closing strategies from our technical experts. Ruchit, I'll start off with you first.
I would recommend buying HDFC Limited for a BTSD. Certainly, the kind of range that we are talking about in Nifty of 10,880 on the higher side. If we see a breakout of this range in tomorrow's trading session, then amongst the heavyweight, HDFC could take the leadership, because the prices have already consolidated, and in last half an hour or 1 hour we have seen a good up move with good volumes. So for BTSD, I would recommend buying HDFC Limited at current levels, keeping stop below 1970 for target around 2040.
Rahul, Mohindar, what about you?
I'll have two buy calls again from that short-term perspective. One is Aurobindo Pharma. I'm looking at 780.85 as a reasonable target for this one. 740 being a stop loss I'd like to work with. Another buy call that you could do, again, this is clearly short-term, would be to look at a stock like Tech Mahindra. I know this has really not moved a lot today, but I expect that over the next few days, we might see levels closer to 705 to 710 come in. So with a stop loss at 687, I'd look at buying Tech Mahindra, clearly short-term.
Rahul, any comments on Oberoi Realty or Godrej Properties, both outperformers within the real estate pack?
I don't actively track it. However, Oberoi Realty, yes, I've been looking at the stock for the last couple of days. I've seen there's a lot of volume build-up, a lot of price build-up around this 440 to 450 level. So undoubtedly, this is a stock which has tremendous support there. So I think it would really be a hold for me, keeping a stop loss if that 445 level really breaks down. In terms of price targets, we don't have any price targets out there right now, but again, we're looking at levels closer to about 500 on this one.
Okay, well, in terms of some other stocks that I want to discuss is perhaps the infra space. Now, something like a Larsen & Toubro is up and about, and we've had some queries coming in here as well. So I'm going to extend this question to Siddharth. Siddharth, let's talk about L&T. Perhaps if you can talk about that. And secondly, the infrastructure space in general. Is Larsen & Toubro perhaps the best way to go about it, or are there other prospects that you have in mind at this point in time?
No, absolutely. When you talk about infrastructure, the proxy to the infrastructure is L&T. There is no doubt about it. L&T being the lead player in the space with strong order book, we believe that L&T has a full potential for 2019 to give a great performance. However, we've seen that L&T was a non-performer since many years now, but now I feel it's a sleeping giant which is coming up to perform well. 2019, as we know that elections are coming up, there would be a lot of execution activities which will be done. Implementations will be strong. So L&T will play a vital role in this, and the kind of management guidance is there on order book by 10 to 12%, as well as the revenue guidance of 12 to 15%. I think it's quite achievable. We know that L&T has come out with a buyback at 1475. We still believe L&T has a strong potential to deliver for the investors with a target of 1894. It's a sleeping giant which will perform big time in 2019.
Right, Siddharth, come in on the auto ancillary space as well, and this is the question that I have been asking experts. You know, in one side you do see gains in the likes of Motherson Sumi. On the other hand, you also have perhaps some weakness in Bharat Forge and GNA Axles based on the kind of traction that we're seeing in Class 8 trucks in the US. How would you go about this sector? What's the best way of playing in this segment?
See, slowdown in the OEMs is something which is very temporary in nature. Maybe another 2 months we can see passenger vehicles, commercial vehicles not performing that great, sales numbers not coming. So the same impact will be seen in the auto ancillary pack also. And when you are talking about Bharat Forge or Motherson Sumi for that matter, we are still positive on Bharat Forge, although there is a miss in terms of numbers in Class 8 trucks, which constitutes of around 12-15% for US markets for Bharat Forge, and if I take it for the entire commercial vehicle space for Bharat Forge, it constitutes, including India and US, around 30-40%. So of course it's a good chunk, but still I believe that the sales numbers can turn around soon. And let's not forget, Bharat Forge is a very big contender in the private sector space for defense orders. And although I understand elections in front of us, maybe some activities slowed down, but eventually, if I talk about 5 to 10 years from here on, there will be slew of defense orders which will be flown to the private sector, and I would say the leader of the private sector would be Bharat Forge. So I am quite confident with a medium to long term perspective on Bharat Forge, although there is a tepid period which is going on off late, but I think one should keep holding and keep the patience going.
Got that. We'll leave it at that. Siddharth, thanks very much for joining us. Appreciate you taking out the time. A quick comment there on Bharat Forge from Siddharth Sedani. Rahul, on HCL Tech, compared to some of the other bigger names, there's been, you know, the underperformance that's pretty evident. The stock at about 937. The last buyback happened at about 1100. From there, the stock's not done really a whole lot much. What would happen now? Do you see a lot of activity in terms of, the price movement on this stock, or any crucial technical levels that you need to watch out for before that?
I'm not expecting a lot of fireworks within technology as a space per se. I really think it's going to be more neutral to negative. Strong resistance, of course, was witnessed historically at 1100 plus levels on HCL Tech. We rotated from that. And I think now on the downside, we'll settle down somewhere, sub 900. So maybe somewhere between 850 and 900, it will find strong support. So, I don't think this is a point I would like to buy the stock. Neither do I think there's enough room to sell short as a short-term trader. So I'd say I'd wait and watch for those levels. Let's come a little below 900. That's when it reaches a support zone. Even the volumes have kind of softened out over the last 3-4 sessions. So I'd really wait it out and think that technology on the whole looks more neutral to negative. Even if I look at the big boys in Infosys or TCS, I still think they're not stocks which are going to give us immediate new highs or any immediate fireworks over the next 3 to 4 weeks.
Okay, what I do want to address is also one more stock from the technology space, and that's Larsen & Toubro Infotech. Do remember that this is one of those stocks which is perhaps more expensive than some of those larger names, at least as far as price to earnings are concerned, and by that I mean forward price to earnings. L&T Info is currently at around 1760, and what has become a usual now is when a technology sector advances or sees some amount of gains, L&T Infotech is one that perhaps leads the gains come through. Ruchit, what's your view on L&T Infotech? What's going on, and if you could possibly tell us behind the sharp surge in its price today as well?
So broadly, if we see, then L&T Infotech has been one of the outperformers since last few months. Now till September 2018, we had seen a series of formation of higher top, higher bottom structure, and post that a consolidation phase was seen. Now this entire consolidation phase just seemed to be a time-wise correction within an uptrend. So the broader trend still remains positive, and today's up move certainly comes from its support of 200-day moving average, where it has been consolidating since last 2 weeks. So I think in short term, again, there are higher chances that the stock would resume its uptrend and would head higher again towards 1850, 1900 kind of levels. So certainly I think for at least from a short-term trading perspective, one should definitely create fresh long positions over here, keeping stop loss below 1660 for target around 1850 to 1900.
All right, gentlemen, just stay on with us. We'll come back to you for closing comments. But let's quickly wrap up the markets for you as we head towards market closing. Just under 2 minutes left to go. Not a bad day at all. In fact, the third straight day of the Nifty as well as the Sensex and the banks shutting shop in the green. So you've got the Nifty up about 0.6% and the Sensex as well, another 0.5% given up on the upside. Nifty Bank, once again, your key movers are from the banking space, be the likes of an Axis Bank, you've got the likes of an HDFC Limited, HDFC Bank, all of them contributing. Not so much so in terms of the cheer on the mid caps and small caps. In fact, a day of slump out there. So 0.25% given up on the small cap index. You've got 0.1% shaved off on the Nifty mid cap space. Let's quickly tell you the internals of the index and what made its move on the upside and what languished on the downside. So it was the oil and gas stocks. We'll come to that in a bit, that lost out, but the gains came in from the banks. Axis Bank was your top gainer, ITC following suit, 2.5% higher. Tata Motors gains ground, and that's a consistent performer over the last few trading sessions. UPL is up 1.8%. Then you've got a Nisha Motors, in India Bulls Housing. IndusInd Bank posts numbers. Numbers have been digested well. The stock's up 1.5%. Bharti and Dr. Reddy in the green. Amongst the bigger losers, you have the likes of GAIL, HPBP, IOC, all of them. So the entire oil and gas pack. Now the Brent crude is up at $60 plus. You're seeing the implications for most of the oil and gas names out there. Yes Bank ahead of the announcement of the name of the MD that will succeed Rana Kapoor. That stock's given up 3%. Ultratech Cement, then you've got Tata Steel losing 2.5%, and following that JSW Steel, ONGC, IOC are some of the other losers in trade today. But Agam, what's the broader market looking like?
Sure, Devina, you pointed out the relative underperformance of broader markets in comparison to the benchmarks, and that is evident in the NSE 500 because we have about 2 gainers for 3 losers in today's day of trade. I'm going to start with some of those names now. We have Praj Industries, which is right at the top of my list in the advance. So we do have about 12% gains for Praj Industries, also one of the top gainers on the NSE 500. That's followed by DB Corp. We spoke to the management. They have spoken about the advantages coming in on the back of government hikes with respect to ad rates. We also have Soba, which is up and about. That's also advancing in trade, and that's where we're seeing gains of around 7.5% coming through. GMR Infra is the other surprising one. Usually doesn't show up in the gainers list, but today is an exception, and we are seeing about 5.5% increase there as well. IDBI Bank is seeing a sharp spike today as well from the from the public sector banking space. That's up 5%. Group Finance is the other one which is in focus today, and this one is on the losing end. In fact, it continues its down move, building on the losses that we saw yesterday, down 8%. Lux Industries is the other curious one, considering a loss of as much as 5% and over 5% today, and it's likely to close at day's lows. Actually, it has. And the final one, or perhaps the final 2 stocks I have on list, one of them is Dilip Buildcon. Likelihood of a cut in guidance, and that's the reason why you're seeing some weakness there. And NMDC is the final one on my list. More weakness coming in on account of possible weakness with respect to commodity prices. So not the best of days for your broader markets, Devina.
Well, but for the benchmark, no complaints out there. That's the Nifty Bank for you, 27,720. We are comfortable above 10,800 on the Nifty, making our approach towards 10,900. But it's going to be interesting to see, what the volume picture looks like this afternoon and whether or not this kind of move has been supported by that. So a heavy number on the futures and options side. So 11.16 lakh crores, where the average has been around 7, and on a day where there's lack of volume, it's even gone down to 5 lakhs. So this is definitely a big number. Yeah. Cash market picks up and comes back to average.
It certainly does, because the cash market is certainly looking it's slightly bigger to me in general as comparison to what we've seen the previous few days. But let's bring up your advance decline ratio as well, because that will be important to watch. Yesterday we had about 1:1 when it comes to advance and declines on the National Stock Exchange. Today we have more declines as compared to advances. To put it roughly, about well, it's largely 2:3 if I'm not mistaken, and it's actually gotten worse in the last 1 hour of trade because before that it was fairly evenly poised. If you can also take a look at the contributors and see where how things are panned out with respect to the the up move in the Nifty. HDFC heavyweights like ITC, Axis Bank and HDFC Bank were providing the bulk of the gains there, Devina.
Losses coming in from the oil and gas space. Yes Bank though from the banking space on its own trip today, down about 3.5% by close. So that's how the markets shaped up in today's session. Let's quickly get in some closing comments from our technical experts. Ruchit, let's start off with you first.
First, reiterate that we have been trading in a consolidation phase since last 1 month on the Nifty index. Now, this consolidation phase has led to formation of a triangle pattern, and now considering today's volatility within a range, and that we are quite close to the apex end of the pattern, I think we should see a breakout from this triangle pattern in tomorrow's trading session or maximum in a day or two. Now, about 10,880. That would open up doors for further higher levels around for targets around 11,050. So traders should look these two levels of 10,880 on the higher side and today's low of 10,750 on the lower side. Whichever breakout is seen in tomorrow's trading session, trade in the direction of that breakout.
Right, Rahul, your closing thoughts on the Nifty. What are you saying and how are you reading this now?
Again, it's very, very essential we get past 10,920, ideally on a closing basis. One should, exercise a lot of caution in these phases of sideways movements and volatility, rather than preempting that it will go above it or it will go below it. I think you need to wait for the numbers to do the talking. I think we've got some very important numbers also coming out in terms of financials over the next day or two. So, eyes have to be on various factors, and presently I would say that unless we get above 10,920, don't fire the next bullet. There are a lot of stocks, for example, sectors like auto. If you look at some of the infra plays, they continue to be negative. You look at the technology. So there could be a balancing act, and you could still have a beautifully sideways market where you have a set of stocks moving up and a set of them balancing it down. So let's wait and watch. My view is the bank Nifty is definitely stronger. We should see some follow through. But on the Nifty, we need to wait for that 10,920 to be broken out on a close.
All right, we'll leave it at that. Ruchit and Rahul, thanks very much for joining in. Appreciate you both giving us your time. And with that, it's a wrap on this edition of Countdown. Thanks a lot for watching. From Agam, myself, and the entire team that's put the show together.